Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, consumers are still feeling the stress of too much debt. And what does the future of Canada Post hold? It probably won't look like its past. Plus, a former environment minister on Canada's current take on climate change. That's all ahead. First, for the week that was in business, it's time for the briefs. Canada showed strength in the labour market in September despite concerns about trade. The unemployment rate in Canada remains at one of its highest levels in years. Some sectors continue to struggle under the weight of tariffs, and others, including oil and gas, are making cost-saving cuts. That includes both Imperial Oil and Exxon. Meanwhile, it's expected that some government departments will begin to shed workers as part of across-government department cuts. This week, Service Canada said it would eliminate 250 jobs at the Passport Office based on new forecasts for demand. Prime Minister Carney's meeting with U.S. President Trump this week didn't yield anything concrete. Tariffs remain in place on steel and aluminum, and new tariffs on lumber and some finished goods are still pending next week. Still, the trade negotiators in D.C. seemed to signal they were happy with the meeting, which included a directive by the president to his teams to quickly reach agreement on some of those issues. A leading economist says the federal deficit could balloon to $100 billion this fiscal year. National Bank Stéphane Marion made the remarks at a Bloomberg conference this week where he called the upcoming budget the most consequential budget in a generation and noted that Canada has fiscal room to spend that some other nations do not. A strike by public school teachers in Alberta this week had 51,000 union members on strike and 730,000 students out of the classroom. Striking members do not receive pay while they're out. The key issues on the table are wage increases and staffing to support class sizes. Teachers in Alberta last went on strike in 2002. The U.S. government has taken ownership stakes in two BC mining companies. Its 10% stake in Trilogy Metals comes on the heels of a 5% purchase of Lithium Americas. The U.S. wants to reduce its dependence on critical minerals sourced in China. Trilogy Metals has a copper interest in Alaska, and Vancouver-based Lithium is developing one of the world's largest lithium plays in Nevada. And those are your business briefs. If there's one thing most likely to tip someone over the edge, it's a precarious job market. Grant Bazian is president of MNP. Thanks for being with us, Grant.
Thank you for having me.
I was really struck in your recent survey at the trade-offs people are making between meeting their obligations, using fewer utilities, choosing to eat less. This is alarming.
I would agree. It's when you're seeing almost 25% of the people reducing what they eat in terms of maybe volume and the pricing, and reducing their utilities such as heat by almost 33% in order to make ends meet. That's definitely a concern. These people are definitely feeling, constraints in their life, and thankfully they're maybe able to make amendments by adjusting those costs, but it's definitely in a bit of an alarming trend.
And of course, we do know that labor market health is one of the indicators of how people will feel about their own debt, their ability to service their debt. As we look at, unemployment rates are at relatively high levels to what we've seen recently. Is it likely to make people feel more nervous given what's going on?
I would definitely say so. Uncertainty always drives anxiety and stress. And our survey is a sentiment survey based upon how people feel. And so when you have economic uncertainty through jobs or job loss or hard to get a job, warfare around the country, tariff situations like this, all that uncertainty creates anxiety, and it definitely reflects on what people feel they can afford for the future. If they are looking for work and they can't find work, or if they have uncertainty about the longevity of their work, they're making changes to adapt. But this is the first time we've seen indices like this, where people are actually, watching what they eat and controlling the thermostat to make things affordable for them. So it's a concern.
Absolutely. One thing we have seen is wages have been going up, right? We saw adjustments for inflation, and they're still running above 3%, almost 3.5% in terms of overall wage growth. Is that enough to change the affordability picture for some people, or is it just a game of catch up to the inflation we've already seen?
Yeah, I think it's a bit of both. Too early to tell. When people come in, they're not saying I've got a raise and I still can't make ends meet. I think it's a bigger problem. I don't think the wage increase will change many people's positions. In some cases, it will. And keep in mind that most Canadians are probably fine with what's going on. This is a smaller cohort of the population, but it is definitely a concern. Will wages increases compensate? probably not sufficiently. Maybe they'll turn their heat up a bit more. Maybe they'll eat a bit more. But the lingering issues of their other debt is looming there. And the uncertainty of interest rates. I think 60% of Canadians' mortgages are going to be coming due by the end of 2026.
Yeah.
That's a big number. So interest rates are definitely a concern for people. And I think they're getting ahead of the game going, well, I might as well start budgeting properly now and reduce what I can. So they're smart.
And then I want to ask you, you and I have been around long enough to remember what happened in the early 90s with real estate. I'm not saying we're going there, Grant, but when we see interest rates coming down, so there may be a bit of relief on mortgages, we still might see people with mortgages that are more valuable than the market price of their home. Is there a territory here where we start to get into trouble if we see home and condo prices continue to decline? They haven't declined that much yet, but some markets we are starting to see a little bit of softness.
Yeah, definitely. I think that adds fuel to the fire. We have negative equity in property. Your mortgage supersedes the value. And I think that's already starting to happen in certain, like the condo market is probably a good market that you would see that in. That, like I say, adds fuel to the fire. It adds more uncertainty and anxiety for people. Just one more variable that Canadians are facing right now.
So good to have you with us, Grant. Really appreciate it.
Well, thank you for having me.
Grant Bazian is president of MNP. Coming up, if Canada Post is hopelessly out of date, what happens to all those workers? Stay with us. Welcome back. Canada Post continues to face an existential threat to its future. Here's a look at the Postal Service by the numbers. Canada Post employs more than 68,000 people, servicing 17.4 million addresses across the country on 22,500 routes. To do that, it has 22 processing plants and 462 letter depots, a fleet of 14,800 trucks, and 5,800 offices and franchises. Mail volume is down from a peak of $5.5 billion in 2006 to $2 billion in 2023, and its share of the lucrative parcel market is down too, from 60% in 2019 to less than 24% today. That all added up to $1 billion loss in 2024. The Crown Corporation needed $1 billion injection from the federal government this year and will need the same every year starting in 2026. The organization says most of its employees can't be laid off for any reason based on their collective agreement. If all of that sounds pretty dire, it is. Ian Lee is an associate prof at the Sprott School of Business at Carleton University. Thanks for being with us, Ian.
My pleasure, Amanda.
You've done a lot of work looking at Canada Post, so I do want to start with your current thought about where it goes from here. They're out on strike, but the message we're hearing is that this is not a functioning business.
It isn't. I said long before Mr. Kaplan did that Canada Post is insolvent. Insolvency is defined in the Bankruptcy Act as the inability to make your payments on your debts as they become due. I'm a former banker. They can't make their payments because they're getting bailed out. And I predict there's going to be another bailout any day, the moment they announce their losses for this year, which will probably be about $1.5 billion, and they're going to get another bailout. And next year there'll be another bailout. So they are insolvent. And so they need radical surgery, radical restructuring.
Of all the numbers that we just trotted through describing Canada Post, the one that actually surprised me the most is one that's supposed to show how the volume of mail has fallen. But to be honest, Ian, I was surprised that in 2023, 2 billion pieces of mail were still delivered. That's a lot. Is there still a viable service that's required here?
Yes and no. Let's break it apart. The letter mail is declining steadily. It's going to go down even more next year. And the next year, I predict it's going to essentially vanish. There may be a small statistical tail in 10 years, a couple of million pieces, maybe 10 million pieces. It's going to vanish. All we have to do, because older people write me and say, don't you understand? I write letters to my grandchildren and so forth. And I write back and very politely say, talk to your grandchildren. Do they write you letters? No, they don't. They send you text. They send you TikTok, they send you email, but they don't write letters. And the only people that are writing letters are a small number of small businesses that have not yet digitized their value chain, but they continue to do it year by year. And secondly, elderly people who are sadly passing away year by year. Within 10 years, there'll be no letter mail left. So that means Canada Post must reinvent themselves to become the partner of e-commerce, or they will disappear.
Does it feel to you as though that reinvention will mean a lot of layoffs? I mean, there are a lot of bodies on the ground here doing this more traditional service. Do you need all of them as you reimagine?
No. 65,000 people are at the post office, and that's the same headcount as when they had all their business before it started to collapse. They ran the last 10 years. They squandered 10 years of opportunity. I warned them. I appeared before the Blue Ribbon panel in 2016, and I had the numbers there at the time saying you are in a steep downward decline. And they squandered those opportunities because not only Prime Minister Trudeau and Dominique LeBlanc, the minister responsible, but the management of Canada Post and the Blue Ribbon panel and Cup W all denied that the situation was dire or grim. They said, yes, it's gone down, but it's going to plateau and everything's going to be fine. And there was absolutely no evidence whatsoever to support that.
Yeah.
So okay, they lost those 10 years. And so I believe, Amanda, it's going to, Cup W is in deep denial. We know that. Everyone knows that. All you have to do is read their speeches. And so it's going to require, I believe, a legislated restructuring. And to your question, I predict out of the 65,000 people still on the payroll today, they will need, once they completely restructure, as I envisage it, maybe 10, maybe 15,000 people. So they've got a very large downsizing ahead of them.
10 seconds here, Ian. Bottom line, the writing is on the wall for Canada Post.
Oh, absolutely. This is going to, now they may amortize it over 5 years, the downsizing, but we're talking probably 40,000 people will ultimately lose their jobs at Canada Post when they complete the restructuring and the downsizing.
Got to leave it there. Ian, so good to have you. Appreciate your time today.
My pleasure, Amanda. Thank you.
Ian Lee is an associate prof at the Sprott School of Business at Carleton University. There's a strong sense that a lot of sectors, it's not just the quantity of jobs that are at risk, but that the type of work we do in future will look very different. Mikhail Skuterud is director of the Canadian Labour Economics Forum and a professor at the University of Waterloo. Thanks for being with us.
Thanks for having me, Amanda.
So I wanted big picture to ask you, there are some sectors, Canada Post is one of them, we've been talking about it, where it seems obvious things are going to change, jobs might be different in the future. Others, it's less clear how they're going to change. Are we prepared to roll with it? Are we prepared to evolve?
I don't think we're in a particularly exceptional period right now in terms of this type of transformation happening. The mix of jobs that are done in an economy are not fixed, and they're never fixed. They're constantly evolving for many reasons. Part of it is the skills of workers are changing, but a very important part, maybe the most important part, is that technology, the capital that we use to produce things, is constantly evolving. And so we always, I think, tend to think that the moment we're in is really special and we're on the precipice of something very different. I don't see anything in the data to suggest that that's true. There are constantly these kinds of reallocations of labor between sectors of the economy.
Interesting. So you wouldn't look at a coming technology like AI and believe the worst case scenarios that we're told about the job replacement?
I've heard some of the, if what you're hearing as the worst case scenario is what I'm hearing, then no, I'm not that much of a pessimist. We've been through in our life, I think you and I are a similar vintage. We've seen the introduction of computers. I entered the labor market as the internet was coming into play. We heard similar kind of stories about what impact that was going to have on the jobs that we do and how many jobs would be available. And there is a sense that, this goes back, of course, hundreds of thousands of years about people worrying about the possibility for technology to make human beings obsolete. History tells us that's not what happens. What happens is that technology evolves. It allows us to produce the same using less labor in a particular sector. And what that does is it doesn't mean that people are laid off and they just go home and do nothing now and feel miserable about their lives. It means they get reallocated to do something else, to produce things that weren't produced before. And that's what raises living standards. That's a very positive thing about, that technological innovation, technological improvement is critical.
Yeah, what you economists call creative destruction. Over time, I guess I would ask you, have we done a pretty good job, and therefore are we still doing a good job of preparing people to change with the changes that do happen? They happen kind of, as I guess you would say, naturally. Do we do a good job of all the retraining? Because the government at every level is spending hundreds of millions on this task right now.
Yeah, so, the way I framed it now is, of course, quite theoretical. It's a very long-run perspective. In the short run, when these technological changes happen and workers are displaced as a result, and we need this reallocation to happen, there is pain. For individual workers who are feeling that displacement, there's pain. And depending at what part of your life cycle this is happening, retraining, becoming productive in a different type of job that's producing something quite different can be very difficult. And so I think there are policies that allow that kind of reallocation to happen in a way that's less painful.
Yep.
From what I've seen over the years of what kind of policies are most effective, I think there are training policies that are quite effective at trying to upskill people and allow workers to reallocate in an efficient way.
So good to have you for this, Mikhail. Appreciate it.
Thanks for having me, Amanda.
Mikhail Scudder is director of the Canadian Labour Economics Forum. Coming up, forget $10 a day daycare. Should it be free? That's still ahead. But first, for the first time in 3 years, the price of a Tim Hortons coffee is going up at a rate of about 1.5% a cup, or an average of 3 cents, according to the company. What's surprising about the news isn't that it's happening. Coffee prices have doubled in the past few years, largely thanks to volatile weather, reducing crop harvests in Colombia, Brazil, and Vietnam. No, what's surprising is how little it was, given that fact. Maybe it's a sign companies will take a hit to profit, knowing consumers have little more to give. We're back after this. Welcome back. This week on the Wonk podcast, I spoke with Canada's former Minister of the Environment, Catherine McKenna, about her new book, Run Like a Girl. I started by asking about what feels like a change in the conversation around climate change.
We can pretend that climate isn't a thing and just pretend that we can continue moving forward in building new fossil fuel infrastructure. And obviously, it's a complicated transition. It's not going to happen overnight. But the reality is the costs are going to overwhelm us. And there will be a moment where people will be more rational, including the business side. So, look, I think there is still a lot of action, including in Republican states where they're still moving forward on renewables because they're just cheaper and better. Mark Carney knows about the risks and costs of climate change better than anyone. So I'm hopeful that he, of course, is focused on trade. He's focused on growing the economy. I was infrastructure minister. We got to get projects built quickly. But we also have to be realistic that we have to do our part in tackling climate change because it's a global challenge. And also we want to avoid squandering taxpayer dollars when companies and creating the wrong incentives. So they just continue giving their profits back to their shareholders outside of Canada. And stranded assets. I think that there's a lack of understanding, the world is moving forward and China has been disruptive in this space. They are winning, by the way. Obviously, they're winning on EVs, they're winning on solar, they're winning on battery storage, but they are also transforming the energy needs. So that's why we talk about peak energy by 2030, because if you go outside of Canada, the EVs, Chinese EVs are everywhere, and that's really driving down the energy needs. But we seem to be less aware of projections from the International Energy Agency. They're not, the most progressive organization. So, look, I think we have to be really tough in Canada. We have to protect our economy. We have to stand up for trade. We have to get major projects built. But we need to be part of the energy transition, both because it's an economic risk and an economic opportunity. And we also, I think, care about future generations and not just passing on the costs of climate change, which are growing every minute to them.
For all that climate can be a polarizing subject, McKenna's convinced Canadians are up for the task ahead.
That's the other thing. When I talk about, say, oil and gas or the energy transition or climate, I just try to talk like a reasonable person because I believe Canadians are reasonable. The problem, though, is the polarization online, the disinformation online, the attacks online, which are all amplified with algorithms that are used to foster hate, and are now these are all they're all owned by tech bros that are billionaires and Americans with a particular agenda. Like that's a real problem, and so we're going to have to fight this. But I think, Canadians are going to have to, we're going to have to really dig deep if we don't want polarization on every issue. And the reality is climate is impacting, if we just take one thing, it's impacting everyone. Like Fort McMurray, 70,000 people had to be evacuated on one road. Can you imagine? Like a lot of people could have died if the fire went on the road. Like I think we're kind of living in this dream world, and I'm not trying to be polarizing.
That was some of my conversation with Catherine McKenna on this week's episode of the Wonk podcast. Time for the takeaway and the real meaning of universal. Daycare in Canada got cheaper a few years back thanks to a promise from the federal government to help fund programs so that the average cost could come down as low as $10 a day. That was an arbitrary number, but now, of course, has become the measure of whether the concept is working. At its heart, universal care is about early learning as well as childcare. It acknowledges that there are huge inequities in how some workers can manage their children compared to others. And it builds on a lot of research about how early learning can support and make an enormous difference for children. A few years in, and many parents would call the idea a success, the cost of care for their children has plummeted. Unfortunately, there still isn't enough care to go around, leaving some facing a different kind of imbalance. Creating funding for more licensed, well-paid childcare professionals might eventually fall into the same overall bucket as teachers. It's a similar profession with similar importance. And since we agree in Canada that schools should be publicly funded, the principle being that one's income shouldn't dictate whether your child gets an education, why not agree that early learning and care is just as important? In other words, extend the school system down and fund the workers needed to care for kids. The upshot where it's been done is more workers paying more income tax, so it's not a total sinkhole of costs for government. But once we've agreed on its overall value to society, why put any price on the service? Some will argue that by giving parents choice, you foster competition, but at $10, it's not much of a premium. If we are going to charge anything for this important aspect of our kids' lives, we could means test it, but then again, why not means test our public schools? The answer here is the same as some other important places in Canada, because making something universal is one surefire way to make sure we all care about it and that we all contribute to it. My takeaway? Why not agree on the importance of caring for our youngest citizens and stop putting a price on it? That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.